number. So ideally we need to bring them up to speed so that we don't penalize you when we didn't talk to you. At least let us talk to you, and you will just refuse to do what we have advised. That is another case also. But at least we have to do our duty of walking you through and nurturing you through that tax type so that you can be very clear, and even differentiating these items, telling you what is in what is exempt. We introduce you to the second schedule of the VAT Act, telling you what is zero rated and what are the implications, because some may not know, because if you're dealing in exempted items, in most cases, you may not need to actually register. Because there's nothing much. You don't charge, period. But if you're dealing in zero rated, ideally you need to register, because when you're expensing, there is actually expense, there is actually input VAT on expenses. So we have to create a window for you to claim that input in your return when you're filing. So that is basically normally the things we want to address when you're moving on with us. That's why we call them onboarding, because the major onboarding is for newly registered, but whenever you add a tax type, you might add excise duty. And ideally, you are producing items locally, what we call local excise duty. So we interest you to the excisable items that are into the Excise Duty Act of 2014. But we are very clear on issues where the excisable item you're dealing in is amongst the items that were gazetted for stamping. So we make sure we make that very clear, because we have a number of items in the Excise Duty Act, but apparently we're only stamping 13 items that are there. And the 13 items started on the 1st of November 2019. We started with 6. Bottled water, soda, beer, wines, spirits, and cigarettes. So in 2021, we added there 2 more items. That was sugar and cement. In 2022, we needed to level the ground. That is when we came with other alcoholic beverages other than the ones I said. So we're trying to bring the kombuchas onto onboard. Yes. So that is where you will see the other non-alcoholic, then other non-alcoholic, other than the soda and the water. Then the fruit juices, fruit and vegetable juice.
That's different from the other non-alcoholic.
Exactly. Fruit and vegetable juice. That's where you'll see the Affias, the Honor, the Splash, Minute Maid. They're into that family. Then we have cooking oil. Then we have fermented beverages. Those are 5. So we initially had 8, then now they are in a total of 13. So the reason why we go ahead to mention all this, because this client needs to know. They may be dealing in one of these, but the fact that nobody has told them, they don't know. So they will produce, then bring the items on the market for sale. So once we are scouting in the market, once we get them, there is a penalty of selling an item that is not stamped. And the penalty is in section 19B of the Tax Procedures Code. It basically talks about 50 million, which is actually very huge.
Yeah, it's
exactly.
Hefty.
So we tell them the do's and don'ts. Don't deface a stamp. Ensure that you activate the stamp. It's not all a matter of putting on, but activating more so to the paper stamps, because the ink-coded stamps, once you put it on, it's activated. But the paper ones that exactly, because these are ink-coated, what you see, ink-coded, that you see here. But we have those that are paper, because we had to provide for entities that are not automated 100%. And they are into business, because the reason why we are doing all this is to see that we can enable business
to continue.
Exactly, so that because when you enable business, we are creating a proper breeding bed where we are going to collect from. So that's the reason we labor to do all these sensitizations, to handhold, to do the stakeholders, to do the onboardings, so that this client comes on board knowing. For example, pay as you earn. You have employed people. You need to know when you deduct and on what amounts. For example, pay as you earn has a threshold of 235,000. So whoever a month does not exceed 235, you will not withhold pay as you earn, but you will indicate in your pay return, because today I'm earning 230, tomorrow you're going to increase to 250. At least I have you in that return, and by that time I'll reclassify you in the right way. So ideally we have to make it clear for those who employ that kindly the threshold is this. Pay as you earn has about 4 bands. If you exceed 235 and you don't exceed 335, that taxing bracket provides for this. If you exceed 335, you don't exceed 410, the taxing bracket provides for this. If you exceed 410 and you don't exceed 10 million, it is this. Once you exceed 10 million, this is how you're supposed to compute. So those are the ones we call onboarding, bringing these employers on board to know how they are supposed to do it. Once you employ somebody, the first conversation is kindly give me your TIN. I'm not giving you the first salary before, because when you tag it to a salary, ideally the TIN will come out easily. Because even if you don't do like that, at the time you have withheld from their salary, how are you going to bring it to us? Because now the template will not validate once you have indicated individuals who don't have TINs. The template will be demanding for their TINs in those boxes, in those fields, so that it can validate. Same applies to withholding tax. Once we designate you, ideally, we add the tax type there. So we engage you, one, to let you know that I have designated you. Me, you are I have designated you. What does it mean? I am requesting you, kindly, as you're managing your business, help me withhold a 6% from those suppliers who will supply you and the transaction amount exceeds $1 million. Yes, kindly do withhold, provided they are not exempted. Then, because when we are exempting, we're exempting institutions, and in some cases, their items say agriculture. Because if it's an agricultural item, a product where you haven't added value, you've brought the beans as they are, you've brought the carrots as they are, you've brought the peas as they are, and supplied them to an entity, then withholding doesn't happen. But in the event that you add value, the maize that you have brought in grain, you have milled it probably and supplied it to a school, and supplied it to a hotel, and supplied it to our children's home or something like that, they need to withhold. Once the transaction amount exceeds $1 million, then the withholding comes in like that. So that we need to onboard you to know, so that the first conversation you hold with your supplier, you tell them, 1, you should have a TIN. 2, you should be ready to be withheld from, provided the amount you set on the invoice has exceeded 1 million. So we do all this so that there is a smooth running of business in between our clients and probably the people they deal with. So that at the end of the day, one doesn't say they withheld my money and I didn't know. That is why we make it better, because the other person we've designated is our advocate. The other people who will explain to the suppliers, kindly, this is what it is. If you're to supply me, these are the terms. So kindly, if you fit into the terms, kindly let me know. So that at the end of the month, you don't say you're not agreeing. So ideally, we do onboarding for newly registered for VAT, newly registered for local excise duty, newly registered for pay as you earn, as I had said, and newly registered for withholding tax. Yes.
So for withholding tax, what happens if the withholding agent does not remit to your?
Exactly.
Those instances come up.
Exactly.
I think so.
What happens if the withholding tax
Agent.
does not remit? The designated agent does not remit. Ideally, when we find out, we are going to demand for it, and it will come with an interest.
Okay, same
And
thing.
secondly, before even that happens, the person they've withheld from is just waiting for the month to elapse. Then this agent files, and once they file, they need to pay, because this agent is waiting, this person here, the supplier is waiting for a tax credit certificate. So they'll put pressure onto the designated agent to supply the tax credit certificate. And you cannot generate it when the amounts are not paid. The system is triggered in that way. Yes, you might have filed, but URA hasn't received the money. And if we haven't received the money, we cannot give a credit note to this person here, because on what basis? We don't have any money for them. So this person will get some little bit of pressure
from the
exactly, so that they can complete the cycle, then give them the tax credit. Because at the end of the day, when you withhold from your supplier has a leeway in their final return when the year ends to indicate the amounts of money that were deducted from them under withholding. Because it is tax we have received in the course of that same year. So it's not prudent to kind of demand, yet they have something here. So what we do, as you represent your details in the return sheet, your income and maybe your expense, your purchases and all that. So when you arrive at your net profit or your chargeable income, it's their net profit, but this side is my chargeable income, the income I'm going to charge to tax. So whatever tax I do get there, before I demand, I have to provide for the amounts they withheld from you in the course of the month. If there's a provisional return you filed and paid, I have to provide for those amounts and deduct them from that amount, so that actually I demand for the net of all those. So that's how it's done. So that's why you will see in some cases the suppliers are demanding for a tax credit. They know how they are going to use it at the end of the year. Exactly, because you may find when a person supplies more than maybe 10 or 20 people. So if he loses track, at the end of the day when they are filing, they may lose out on some credit that has been theirs. So when we talk about onboarding, ideally we onboard, there are two forms of onboarding. We onboard the newly registered. Those that have come to our register for the first time. We do onboard them, then see how we can graduate them to the first return and the first payment. And for these others, you already have a TIN, but it is a tax type that is new on your profile. That's why we onboard you, to let you know of the do's and don'ts of that tax type, so that you don't fall into fault and say, it didn't tell me. And in the event that it didn't tell me, now you're coming up with a penalty. You're coming up with this. So that's the reason why we do it, so that by the time we are done, you can be able to trade on your own and handle your business affairs. Yes.
Thank you, Hafsa. It has come out very well. And to our taxpayers who are watching, feel free to send in your questions, but also feel free to watch this webinar. The rerun will be on all our social media platforms. You can go to YouTube or to our Twitter and rewatch it. And so today we've basically been just introducing to you the whole concept of what onboarding is, who do we onboard, and like she said, the categories are split. There's people who are coming on for the first time, and there's people who's just getting new tax heads on their profile. So going forward, we shall break down and cater for everyone. Like, let's say people who've just got VAT or people who have just joined the lead bracket. We shall break it down further. But for now, Hafsa, if you would please share your closing remarks.
I'd like to thank the viewers very much for having spared their time to learn with us, to listen to us, because we don't take them for granted that they'll always have time, but to listen to us. And those who at least have gotten something out of what we have deliberated today, I would like to thank them very much for keeping in business. We know there are challenges here and there, But everything that challenges, at the end of the day, you'll find victory into it. There is no business that is a straight line that won't have any challenge. But at the end of the day, I just request, let us be compliant in the best way we can so that we do not get any issues with URA. And in the event that you have a challenge, kindly get to URA on 0800 11 7000, 0800 21 7000. We are now on WhatsApp on 772 14 code 0. We are always there to help you, to see that we can patch up what you call a problem. And at the end of the day, business can move on smoothly. And we'd like to thank the Almighty for having given us life up to this day. And we hear from each other and we pray for God's blessings in our businesses and a good life. Thank you very much for God and my country.
Thank you, Hafsa, for coming on the show, and thank you for hand-holding our taxpayer always, virtually and physically. And our taxpayers, thank you for tuning in to Tax MCHUZI. We'll be back next Thursday, same time, same place, with more conversations on how to make your business thrive, and also how to work with a taxman. Thank you. I wish you all a great day. From all of us at URA TV. Bye-bye.
Uganda Revenue Authority, developing Uganda together.